we tweeted last week about potentially doing a weekly market recap. Just a quick and kind of audio update. Was thinking, 10, 15 minutes, but thought I'd start out with something a little more simple, a little more remedial, and just kind of some fundamental stuff with regard to trading and just getting involved in the markets. You need to know candle charts, and that's what we're looking at right now. And just so happens we're actually looking at a Bitcoin chart. And as a lot of you guys know, I've been generally a bear on Bitcoin. Seen a lot of momentum tonight on Bitcoin just with regard to what's happening in China. I posted just a little bit ago about Chinese yuan just getting over 7 versus the US dollar, which is a record. Certainly can be perceived as retaliation against the next round of tariffs that Trump had floated on Thursday of last week, today being August 4th on a Sunday. So markets will open tomorrow morning, August 5th. U.S. futures are pretty soft tonight, off a little over, I think, 1% on NASDAQ. Haven't been watching Dow Jones. I don't even know if it's here on my watch list in terms of after hours, but I think it was down about 160, 170 points. Either way, point of this was just to do a really, really quick recap on how to read these charts. I post these charts a lot. If I post a particular name, whether that's a U.S. equity position, if it's a currency position or ETF or whatever it may be, I'll generally post one of these charts, and these are called candle charts. And I thought it'd be helpful just to give a quick overview of how to read these charts and how to understand how to interpret the data and how to use it. Essentially what you want to use it for is a predictive tool to gauge price trajectory. Where's the stock price or equity price or whatever the name is that you're trading? Where's it going to be into the future, and how can you monetize that? So that's what we're looking at. We're looking at a Bitcoin chart right now. We're actually looking at a one-day chart. So the first thing you want to understand is each and every one of these bars, red and green bars, represents an increment of time. And in this particular case, it represents 1 day. So in Bitcoin, something that trades 24/7, each one of these bars represents 24 hours of trading. This current bar right here is the current 24 hours. It'll turn over here in about another 90 minutes since it's about 10:30 Eastern time here. So that's what each of these bars are. And you can look at charts in any increment of time you want. If you're someone who's day trading and you're very interested on a very granular level of price movement, you're probably looking at charts that are in durations of seconds, right? Whereas, if we're swing traders or we're, investors just looking for a good entry point, you're looking at something more like a one-day chart, maybe a 1-hour chart. In some cases, if you're looking to try to identify macro trends, you're looking at, 1 week, 1 month, even 1 year charts in some cases. But for the purposes of this particular tutorial, we're looking at 1-day charts. Just to give you a sense, we could look at, for example, let's just get down to a 1-minute chart on Bitcoin. You can see it looks a lot different. It gets a lot flatter. There's not as much action per candle, so to speak. You don't see as much range of trading, so to speak. So for that reason, I like to look at a 1-day chart for a tutorial like this. And you'll see some other indicators overlaid here. I've got Bollinger Bands. I've got moving averages. Don't really worry about any of that stuff. We'd probably cover that in a different video. But let's just talk about these candle charts. So like I said, 1 increment of time per bar. And there's several points of data on each bar. It looks like a pretty mundane, color-coded bar, but it's actually, there's about 7 points of data on each one of these bars that we can analyze and extrapolate information from. So first and foremost, obviously, there's green and red bars, right? Green bar means that it closed higher in that increment of time than it opened, right? Whereas a red bar means it closed lower than where it opened. So if we look at this red bar, for instance, right here, which is from July 16th, 2019, that's this 1-day bar, you can see where we traded in terms of the range. You can see we closed much lower than where we opened. It looks like we opened here at about 10.83675, closed, it looks like about 942.2. And obviously the red indicates we closed lower. Now if you look closely, a little more closely, we're going to zoom in on this bar. You can see there's what we call these wicks, or some people call them shadows, but these also represent an additional data point on both sides. It tells you how far it traded to the upside, how far it traded to the low side in that session. Now it might have opened here and closed here, but it traded as deep as here and it traded as high as up here. So those are two more data points on the candle, right? So we know data point number one, it's red or green. We know if it closed or opened, closed higher or lower. We know what the opening price was based on the hard edge of the box, on the low edge of the box. We know where, in this case, it closed. And then we also know how far it traded and how far it traded here. So that's already 5 points of data. 6 point of data is the total range from top to bottom, from wick to wick. That's the total range. So that's the 6 point of data. 7 point of data is, of course, the timestamp, the snapshot in time. Now, the key to understanding candle charts is to take them in context of one another and try to understand what they're telling you sequentially and what that means for price movement moving forward. And there are things called chart patterns that you'll recognize. You're basically looking to identify certain patterns that you can extrapolate data from, do a better job predicting price movement into the future. There's stuff like head and shoulders, bull flags, cup and handle, all kinds of stuff. Won't get into all the weeds on that, but just understand that that's the whole point of using candles. If you see a long wick like this, for example, on this particular candle, this is June 26, 2019. See this really long wick, which has actually established a lower high from the upper high from December 2017 in this case, where we basically just about touched $20,000. Down here, you see the much lower high here at about 13. Oh gosh, this one's about 13.8. But really 13.5 is about where we saw a lot of the bouncing around. But anyway, this wick told you something. It told you that there was a lot of selling pressure once we touched that 13.5. Hence, the price closing for this particular candle much, much lower than where it traded at the top of the range. And then we saw a lower high about, a week and a half later, 2 weeks later. And we've since seen a descending pattern where we saw this much, much lower high. Now we're seeing a breakout here. Largely, this is due to what's happening geopolitically with regard to the trade war in the U.S. But nonetheless, interesting to see. And interesting to see if this is actually a real, honestly, a pivotal point for Bitcoin. When you see these old highs and you see this very bearish pattern all the way down to basically just consolidation and just totally trading sideways here with very little volume or volatility. By the way, the volume here is captured at the very bottom of the chart. We can get into volume in a separate video. But, again, you saw this ramp up, which essentially seemed like a short squeeze. And when this all happened, and this is, May into June of 2019, what was going on at this time was that there was a actually record level of open interest in Bitcoin, which means that there were a lot of people with options contracts against Bitcoin. They didn't necessarily hold Bitcoin. They were betting on future price movement. And what happened was, as Bitcoin rose in price, it created a lot of buying pressure because these people needed to cover, these people who were essentially, short with put options were forced to close their positions, cover their positions, by buying Bitcoin, which drove the price much, much higher. Then I think you had a little hiccup here, first week of June, and then you had this kind of fear of missing out trend, which took it much, much higher, all the way back up to this, like I said, 13.5, where we started to hit resistance. Normally I'd overlay some notes onto this, but just, we'll get to that as we get more advanced here. But thought I'd show you guys this anyway. That's how you read candle charts, honestly. We could get into, again, at some point we'll get into the moving averages and some of these other indicators. Bollinger Bands are very, very interesting in terms of being a predictive tool. But like I said, I liked using Bitcoin here because there's no earnings cyclicality, there's no fundamentals or balance sheets we need to worry about. This really does represent a pretty pure buyer and seller's market outside of the fact that there is some speculation that there's some manipulation. At some point, we can start to incorporate level 2 data so you can understand how level 2 data, which is basically the bid and ask spreads and the order logs, how to extrapolate information from there as well. But again, this is a good first step. Hope you guys got something out of it, and look forward to talking more markets with you guys down the road.